Welcome to today's session and thanks for joining. In these live sessions, I demonstrate a technique for swing trading profitably in any market condition by taking only high probability and low risk trades. How do you confidently take trades that are bucking the trend? And what I mean by stocks that are bucking the trend are not mere contrarian trades or the reversal trades that I take using Q systems, but truly bucking the trend trades. In swing trading, the trend is your friend, as the general wisdom goes. If you are taking trend following trades, the wind is at your back and it is a little bit easier to trade profitably. That is what people tend to say. Is it entirely true? It is true, but it may not tell the full story. Trend following trades are more common as those are easier to find. They are rather easy to identify and trade with general trading systems. Q is unlike other trading systems. Q has trend following setups, not signals but setups like flow, pullback and breakout, which can be trend following. It also has trend reversing trades like bounce, box, headwind, etc. Why take those reversing trades, which are kind of trades bucking the trend? One reason may be that the reversal trades are more closely aligned with what the market is also doing. For example, if the market ETFs are bouncing up from trendline supports, you may look for a bounce long trade in a stock. That will not be a trend following trade, but that will be in perfect alignment with the market. And that will give a low risk, higher probability trade. Another case maybe where a stock is bucking the trend of everything around it. Apple short idea I shared last week was such a trade. It was so much bucking the trend, it was against the mega cap index. Mega cap index was up, Apple was down, against QQQ, against the market ETFs in general, so much so that it was worth taking a bearish trade in it. That was from the technical side. Apple's bucking the trend was not only in terms of technical. Q Vital Fundamental Scorecard, specifically insider selling also helped in that decision. Q Edge showed Apple was bucking the industry trend also, and that is where it was an extreme case, even more so than the usual reversal trades I take in Q. In usual Q reversal trades, I like to align the stock with the industry strength or weakness, though it may be against the market as a whole. I like to align with industry's direction. But Apple was entirely bucking the industry trend also. One reason I could still confidently take it and publicly share it before knowing the results was some news that seemed to be relevant and impactful. I could access the news using Icon's real-time news, and that was also against the stock. I explained that news in the last market recap. You may remember that. If you have not watched, you may review last week's webinar when I proposed this trade and I told I took the trade as well. It was a 360 degrees bucking the trend stock, and that worked even though it was near trendline support. Again, for my usual reversal trades or trend following trades for that matter, I don't like to short if it is near the Q memory trendline support. I don't like to buy if a stock is near Q memory trendline resistance. But Apple was an exception last week. It was near trend line support, but it was so much bucking the trend all around it that I decided to share the trade idea. That support trend line broke this week, even as S&P 500 made a new all-time high. How could you identify such bucking the trend trades? Part of it comes from Q 360 degrees analysis, the fact that Apple was coming down while megacaps were going up on Q charts, the fact that it was going down while the industry was going up, the fact that insiders were selling, but that was not the entire thing. The remaining part, other than Q analysis, was from observing what is going on regarding the stock. And again, I use icon to track those happenings. Icon tells me of those updates in 100% real time. And I like that. As you know, Q is 100% real time across all the dimensions. Q analysis and timely market news on Apple allowed me to take the trade and confidently share it before knowing the results, and it made a good profit, quite a good profit. I'll review the trade chart later today. Reversal trades or contrarian trades are not always so much bucking the trend as was Apple last week. It is actually uncommon to find such bucking the trend trades where the stock is against everything around it. We may not have those every day. However, we can find reversal or contrarian trades more easily, meaning trades that are going against the market but that are aligned with its own industry, that do not have nearby resistance for shorting, that do not have nearby support for short trades, that do not have nearby resistance for long trades. Such reversal or contrarian trades are easier to find regularly. Shall we find one later today? Why not? Meanwhile, can you think of any other mega cap that may fall unexpectedly next? Some hints: there are mega caps where, in spite of many positivities around them, insiders are selling. And there are some mega caps, though they are not giving any short setup as of Friday's close, there are bearish signals like red candle high, bearish signals like probably bear release sign from Q, and also Q reversal signs. If you find such technical weakness on Friday in some mega caps, and you also find some news that might seem, at least to you or me for my case, that may be impactful on the stock on the bearish side, then you may try to combine the Q 360 degrees analysis with that impactful news, not judgment from news websites, but significant news that seem to be impactful bearishly on the stock. Then you may look for another contrarian trades, maybe not as much bucking the trend as Apple, but close to that on the bearish side in this very bullish market. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in India and USA markets using only one trading system, Q, that simplifies my life. You may contact me using my email IDs info@superiorprofit.co or tradingprofitably@gmail.com. These are the few places where I regularly share live market and stock analysis. All these are open to the public. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q has multiple components running on Metastack and TradeStation platforms. I'll use several of them today. One topic aside from my market recap is that during the weekend, I attended yesterday actually, I attended the live training session from Dr. Jeffrey Scott. It was an excellent session, and he regularly shares videos, not only the weekend videos on YouTube channel, but now he is also kindly sharing his market analysis and insights on a Google group, Top Down Trader. I joined that. I highly recommend anybody who is interested in trading profitably, consistently, while managing risk to join the Top Down Trader group. It's a Google group called Top Down Trader. You may Google for it, of course. Instruments that often move the market. This is sorry, did I mix up the slides again? Wait a minute, please. What happened to my dollar index? Back to the instruments that influence the market. Dollar index. The weekly candle is very bearish in shape and color. As bearish as it gets for all these months when it started to go up from the bottom. Interestingly, the candle at the very bottom was extremely bullish for as far back as we can go in the downtrend, and now we see we have an extremely bearish candle. Never happened in the entire uptrend. In the daily, Friday's candle is bearish in shape and color. It broke below the trend line support. In the last few market recaps, I mentioned that dollar index holding this trend line support would continue to put bearish pressure on the market. That support is now broken. However, the yellow direction line is just below Friday's close. It can act as a significant support. If that breaks, that will be bearish for dollar index. That may help the market. Doesn't work always like that, but it may work at least for some categories of stocks. That's why it's worth noting that. On the other hand, if the yellow direction line support holds and it can break above the trend line resistance, that may put pressure on the market. At this point, I am not having any preferred direction for dollar index. I think it may go either way. Looking back, however, when the bearish headwind came in daily, and it did come in weekly, in both cases it caught almost the very top, almost magically. At those points, it would be a contrarian view as per this week's theme. At those extreme high points, I would like to be bearish in dollar index, but not now. Now I have no preferred trading direction. What about mega cap index? Custom mega cap index. This is what I shared in the last market recap. And I mentioned that if it could break the trend line support, I would be bearish on mega cap index. Mega cap index was underperforming. I showed it in detail, but the supports work well. The resistances work well. Tough nuts to crack. It did not break the support. How did it close this week? It did not break the support. Instead, it broke the trend line resistance. When did it break the trend line resistance? On this day. What happened on that day? Netflix came out with earnings, and Netflix, of course, jumped to all-time high. Netflix is part of the mega cap custom index, and I think that largely influenced the breakout to the upside. As you can see, after that, and even on the day of the gap up move, it is not moving up, it is moving sideways. It is right now near the watermark resistance in daily. Friday's candle shape is indecisive, and as you can see again, after Netflix earnings, it didn't move up, it stopped at the watermark resistance. The next trend line support is now far away. If it starts to calm down right now, or even better, if it goes up and comes down, creating a false upside breakout at the daily watermark resistance, I'll be happy to look for shorts. On the other hand, if it continues to go up from here, I will not find easy low risk buying opportunities. So this is again an example where mega cap index is bullish. We can see that in weekly also, bullish in color, bullish in shape, but my preferred trading direction is actually bearish, provided it can come down now or it can create a false upside breakout and come down. In daily it is indecisive, weekly is bullish, but weekly also has the watermark resistance. Again, if it creates a false upside breakout, I am happier to look for shorts in mega cap custom index. But right now, not yet. Market breadth, internal health check. Market follows the internal health, not the other way around. Market breadth total view, the broadest view of the market. I'll not go through all the signals, you probably know about them. If not, you may look or watch the masterclass videos on my YouTube channel. Nothing much to report in this week's total view also, except what I note is that though for 5 days of this week, this custom index total view went up, the candle chart is of a custom index, total view index, it went up, but without any accumulation whatsoever. That does not show very bullish picture under the hood. It is bullish in terms of candle move, but there is no significant accumulation in any of the indexes. If I look at a glance weekly daily view of total view, weekly is bullish in color in shape, but it is near watermark resistance. Daily is also near watermark resistance. We have a bearish shape candle on Friday. Again, this was Netflix earnings date. After that, it is moving sideways. Like I mentioned in case of mega cap index, if it can come down from here right now, or even better, if it creates a false upside breakout, I'll be happy to look for shorts. On the other hand, if it goes straight up from here, it will not be easy to find low risk buying opportunities. And as you can see, it is overbought. My preferred trading direction, again, it's a contrarian view. My preferred trading direction is now bearish, provided it can either come down or create a false upside breakout. Preferred direction is bearish, though in weekly it is actually bullish. Contrarian view. If I drill down into the composites from total view, percentage of stocks above 50-day moving average, the yellow plot, you can see that for both Nasdaq and NYSE, it is below the 50% level. So overall, as far as 50-day moving average view is concerned, market went up, but it seems to be a recovery in a downtrend, this internal health view. It is not uptrending. Majority of stocks are still below 50-day moving average. Nothing much else to report from this chart except that NYSE 3-month new high low is approaching extreme overbought condition. Every time it does that, it tends to pull back. What tends to pull back? The plot. What does it mean? Means that some stocks that are at extreme high price level tends to pull back. It has not reached the extreme overbought level yet, but very close to it, whereas Nasdaq is far from it, showing that Nasdaq is actually weaker than NYSE at present. Interesting, isn't it? In spite of all this flurry of announcements regarding AI investment, Nasdaq is actually weaker than NYSE. What about QQQ versus SPY or infotech sector? We'll find that out soon enough. Major indexes, nothing much to report except that Russell 2000 is underperforming. It is the weakest one internal health wise. So far, all the internal health charts I shared this week, none of them are helping me in terms of choosing a preferred trading direction. So this week I am sharing another view that I don't share in every market recap to save time. That is the leader index, with the hope that it will help me to decide a preferred trading direction. And what we see here is that unlike what I saw and shared in mega cap index, unlike what I saw and shared in total view index, leader index in fact created a false upside breakout in weekly, and it also displayed a bearish indecision at the top. In daily, it created the false upside breakout. It is interestingly currently underperforming the market. And last but not the least, it displayed a cluster of bearish indecision, which I always take seriously. And it displayed a, you can see here also, bear release signal after being overbought for many days. Leader index allows me to short. The next support is far away. So I am getting closer to decide a preferred trading direction by using additional insight from the leaders index. Those were internal health check view. What about external view? This is how most people around the globe see the market. Market ETFs using the weekly interval, all of them were up this week. Interestingly, QQQ was nowhere close to being the best performer. It is the second worst performer, small cap IWM being the worst performer, but all of them were up. Let's look at them from the relative worst performer to the relative best performer to see if that helps us arrive at a more concrete preferred trading direction. IWM weekly is bullish in color, somewhat indecisive in shape. Daily indecisive, of course, because it has a bearish indecision at the top. Indecisive, too late to buy probably, far from recent swing low, but not helping me decide whether I should go for longs or shorts. So I added one more chart this week of IWM, same IWM, the momentum chart, the AGSI like signals. And here we see something interesting. On the bearish side, it happens to be, one is the ice hole failure, and the other is red candle high. Those are bearish signals. So going back again, the Q charts were indecisive. It was too late to buy, but it was not telling me to short. But when I added the momentum signals, now it has more clarity. It allows me to short. It does not allow me to buy. QQQ, weekly, bullish in color, indecisive in shape. Daily has a bear release signal. Again, this gap up here happened after Netflix earnings, and after that it moved sideways. Friday it tilted down. Again, I have the same view as for mega cap index. If it can come down from here, or even better, if it creates a false upside breakout, I'll be happy to short. On the other hand, if it goes straight up from here, it will not be easy for me to find low risk buying opportunities. SPY, more bullish than QQQ. We can see that from weekly candle. Here shape and color both are bullish. But it did close below the watermark resistance. In daily we can see that clearly. It closed below the watermark resistance after breaching it. So Thursday it created a all-time high, an all-time high on a closing basis, and Friday it came down. But it did not have any bear release signal. It is overbought, but it didn't have any bear release signal. It created a false upside breakout, but not in a bearish signal. If it created a bear release signal, then I would be happy to short it on Friday, but it did not. I'm not going to share the momentum charts for all of the market ETFs. You may look it up. SPY, I think, also had a red candle high. In fact, many stocks and market ETFs had red candle high other than QQQ. All the three market ETFs, DIA, IWM, SPY, had red candle high. QQQ did not have red candle high, but QQQ, if I go back again, had the bear release signal. So there are some reasons to look for shorts from the top, that is coming from red candle high or from bear release signal in the market ETF. So this is SPY, also coming from the false upside breakout in SPY. And DIA is the strongest of the market ETFs. Weekly color shape both are bullish. I'll again come to a contrarian view on the market or trades. It is heavily outperforming the market. It had an inside candle on Friday. Price slightly came down. Overbought for many days, most overbought in fact. The only market ETF that is now overbought for 5 days in a row, the only one. But it does not have a bear release signal. And of course, it is not creating any false upside breakout. If it could close below this watermark resistance with a bear release signal, then it would be a false upside breakout that I could use to take short. So that didn't happen. However, again I note, using the momentum chart, it had a red candle high. Not enough signal, of course. Red candle high alone is not enough to take a short trade. If it happened at watermark resistance, that would be better, but it did not come. But I do note the red candle high. Looking at DIA, if I am thinking of contrarian trades, it is very bullish looking, but it has a little bit of bearishness in terms of red candle high, lot of overbought condition, too late to buy, of course. If I'm looking for contrarian trades, therefore I'm going to look for short trades in industrials. Interesting, isn't it? It is the strongest ETF, but I am thinking of taking short trades in industrials. Why and how? I may look for industrial stocks with a short setup as of Friday's close. And if DIA starts to fall next week, they will probably fall faster. That will give me a lucrative shorting opportunity. If DIA goes up, They may not go up as strongly because this week they went up, but they are giving a short setup as of Friday's close. That is how I am looking ahead, not trading based on only where the market is today, which is bullish. DIA is clearly bullish, very bullish in fact, but based on how it may move, often a bit ahead of others, yet with remarkable accuracy due to the 360 degrees approach. Bucket analysis, wonderful tool. Thanks to Dr. Jeffrey Scott, after watching whose videos I implemented it in Q, made it 100% real time. Nothing better pinpoints reversal points with that much accuracy in market analysis. 100% real time and remarkable accuracy. And this is the proof. Proof is in the pudding. This is a tweet, a snapshot from a tweet I shared on 21st January around 10 a.m. Eastern Standard Time. You can see the timestamp here. Using 100% real-time bucket analysis, I showed it was too overbought and she said it was likely to pull back. Why it was extremely overbought? For both the angles, one was that 37.6% stocks were above upper Bollinger Band. Whenever this percentage, the bucket of greater than 10, which is stocks above upper Bollinger Band, it hits 30 to 40% level, it is extremely overbought, and not only those overbought stocks, the market tends to pull back, at least some pockets. And from the other angle also, the jump in percentage of stocks in the uppermost bucket was more than 10%. From 22 point something, it went to 37 point something. From both the angles, it was so overbought that on a very bullish day, I shared my bearish view. What was the expectation? That the percentage of stocks above upper Bollinger Band will pull back, meaning those stocks will come down, giving lucrative shorting opportunities at the top. How is the bucket analysis today? Did the pullback happen? Yes, it happened. Works like almost like magic, but not magic, works mathematically. Bollinger Bands are very effective. When so many stocks are above upper Bollinger Band, it is unsustainable. That's what the bucket analysis shows, and here we see that in real time. What is the percentage of stocks above upper Bollinger Band now? Only 8.2%. What was it when I shared the tweet? 37.6. From 37.6, it came to 8. Almost 30% drop, 29% drop. A huge percentage of stocks pulled back from above upper Bollinger Band, and now there is no signal. It is not overbought, certainly not oversold. It is bullish because 73% stocks are above mid Bollinger Band. So bullish, but now it is not overbought. It has already pulled back. Sector industry stock breadth shows where the market came from, where it is now, where it may go next. Long-term 1-month view, bullish. Again, long-term 10-day view became more bullish. 5-day view still bullish, but the bullishness reduced. 2-day 1-day view still bullish, but bullishness reduced. That allows shorting. This trend of reducing bullishness allows shorting as of Friday's close. On the other hand, if Monday it becomes bullish again, which will show up in this leftmost part, which will show real-time data during market hours. If on Monday the real-time data turns bullish, it will allow buying. But as of Friday's close, this reducing bullishness allows shorting. Again, the weekly view is bullish. Again, an example of how I am looking ahead. I am not only looking at where it is now, but I am looking at where it came from, how it is moving, and that is helping me to decide my preferred trading direction. This one is actually letting me short. Coming to the sector rotation analysis using Q edge, sorted it by Friday's sector score, which shows strength or weakness. The strongest ones are communication services and real estate. Does not look like offensive sectors. These are defensive sectors. Real estate certainly is, communication services is also defensive to a large extent. That does not show a bullish market. Where is information technology? Second worst. In addition, information technology has bearish deceleration, very strong deceleration over 2-day period. Interesting. In spite of flurry of news on AI investment, in spite of Netflix hitting all-time high after earnings, huge gap up open after earnings, Infotech as a sector is one of the worst performing, both in terms of score and deceleration. Does not give that much confidence, certainly not in buying technology stocks. I may not mind buying communication services stocks. See, that is how I'm using the sector analysis, and of course I'll drill down into industry score also after that. I will now prefer to buy com services stocks. I will avoid buying, may even look for shorting infotech stocks. Of course, Apple is an infotech stock that I shared in the last market recap as a bearish candidate. Technical breadth, weekly picture. Again, an example of how I am reading not only where it is now, but where it may go next. Overall, weekly technical breadth is bullish, no doubt about it. Strength setups bullish, continuation setups also bullish, but reversals are bearish. And on top of that, we have a bearish headwind alert. Works remarkably, these headwinds on individual instruments, and when this aggregate alert comes, I am going to be willing to short stocks, especially those at a high price level, because this is signifying stocks at very high price level, because weekly headwind, not even daily headwind. Headwinds tend to come at a high price level, and this is weekly headwind. So this one is telling, though it is bullish at present, I will not mind shorting some stocks at a higher price level with, of course, proper Q360-degree setup, and those may turn out to be quite lucrative opportunity. By the way, Apple that I shorted, and I shared detail of that in the last market recap, it had a bearish headwind at almost the very top. I'll look at the charts later today. Let's go to the daily technical breadth. This is not bullish. Overall, it is bearish. Trend continuation also bearish. Reversal is also bearish. Only strength is bullish. And if I now look into the different strength categories, only breakout is actually bullish. That may have something to do with the earnings season. After earnings, some stocks are breaking out. That is what may be happening. If I leave this breakout category, it is actually quite bearish. Allows shorting, does not allow buying. And see, as I am progressing, how I am trying to arrive at my preferred trading direction by looking at different angles and see which allows buying, which allows shorting with lower risk. And so far I am seeing more instances of allows shorting than instances of allows buying. Market level summary then, the most important trading decision is whether and where to buy or short, or whether to stand aside. My market level summary, I did not trade much last week due to the new government's policy related uncertainty. That was what I mentioned in the last market recap. The market moved up after a flurry of government announcements. A major one on artificial intelligence investment, potential investment of $500 billion, and a few stellar earnings like Netflix. Was it overreaction, over expectation, or maybe outright hype. One would expect the information technology sector to do well after those infotech related announcements earnings. That was exactly the opposite. The result was exactly the opposite. Infotech sector did poorly. Under the hood, there was no accumulation at all, not in any of the indexes, certainly not in QQQ. Those observations are making me suspect the market's inner strength. The lower risk entries are less likely to be on the bullish side if the market drops from here, or if it makes a false upside breakout in multiple instruments that I described earlier. There will be many low risk and possibly lucrative at the top shorting opportunities. Review of last week's trade ideas. Only one. I shared only one trade on the bearish side. It was bucking the trend all around. That was Apple. I'll not go through the entire analysis, but I would like to show one thing using the historical charts. It was an unusual trade. I want to go back here first. The bearish headwind, any of these two, caught the very top. You could trade if the setups were there using short call vertical, the preferred instrument for such bearish trades at the top, or you could try to short the first bearish flow after the bearish headwinds, one of them. So this was the first bearish flow anyway. As I mentioned in the last market recap, I did not catch the very top. Along the way, I shorted using precision entry chart. And on top of that, I clearly mentioned I added to my short position on Thursday 1 week ago, added even more on Friday 1 week ago. And what was so special of Thursday, Friday? It tried to go up, made a feeble recovery in a downtrend, and then it fell down again on Thursday, tried to go up on Friday. Friday was, this is 1 week ago. It was very, sorry, which one? 1, 2, 3, 4, 5. So here, sorry. I think this was Friday, right? Friday 17, 21. Yes. Yes. Then, okay. 16, 17. Yeah. Okay. Then I was all right. I shorted more on both Thursday, Friday. Yes. So this was a 4 trading day week. I was busy during the week, as you can see. Okay. I didn't trade much anyway. So in any case, I had, again recapping what I shared in the last month, I shorted Apple along the way, but on the last market recap, I was confident to share that I took additional bearish positions, all were using options. And it was a very much bucking the trade, and it was unusual for me to short when the stock was above a trend line support. But I did that, I shared that publicly. And though the market went up, though SPY made a new all-time high, it very easily broke below the trend line support. And at the low of one of these days, many of my options positions had more than 80% profit, and I booked profit in them. Some of the positions I opened on Thursday, Friday, 1 week ago, I am still holding. Those are options positions with more than 50% profit. I am surely going to make a profit from this very much bucking the trend trade. Again, I could take such a trade with confidence, not only because of Q360 degrees analysis, but also knowing what was happening around the stock through icons news in real time. And there may be some other mega cap stocks having impactful contrarian news, bearish news that came out recently. You may keep an eye on meaningful news, not judgments from other market experts about what a stock may do or not do. So in any case, Apple worked beautifully. I made a nice profit taking a bearish trade in a very bullish week. That is the value of knowing your trading system. and using it confidently. This week's trade ideas. Let me share one possible long, one possible short candidate. I will share a possible long from communication services, the strongest sector. I'll try to share a short in industrials. That is actually the strongest ETF, but that will be an example of contrarian trade. Not entirely bucking the trade like Apple, because I'll have industry in my favor probably. But let's start with the bullish trade, communication sector. The stock is Iridium, IRDM. It has a breakout in daily. I'll share the pros and cons also. This has a breakout in daily, however, the recent swing low is far away. So typically, I would not like to buy this. Even now, I'm hesitating to buy it. I may not want to buy it on Monday. I did not buy it on Friday because the swing low is far away. I like to take breakouts when the stop is not so far away. But what attracted my attention? Well, first of all, how did I come to this stock is because I did a top-down analysis starting from the strongest sector, which was com services, and this had strong industry. I'll show that, and this had a proper breakout setup, though the stop is a bit far away. What attracted my attention was that after a long time, and usually I go to the screen length, never had the big move up 3, the parent of all bullish momentum. And what caught my attention is that weekly broke out decisively also of multiple trendline resistances as trendline support in weekly. This is one of the strongest patterns in technical analysis when we have weekly trendline support breaking above daily trendline resistance, in this case breaking above weekly trendline resistance also. And looking back, again almost magically, this bearish, sorry not bearish, this bullish headwind caught almost the very low. After that it didn't come down much, so a short put vertical taken at that time with proper daily analysis would be making profit for all this time. In any case, I thought it was worth looking at this stock, though again I did not buy it and I hesitating to buy it on Monday also, unless I try to enter it using precision entry chart. Using the daily chart, I am going to hesitate to buy it because the top is far away. But in any case, let's complete the 360 degrees analysis. Iridium, fantastic earnings growth and rapidly accelerating earnings growth, also improving revenue growth. 67% of peer stocks went up on Friday. Funds are accumulating, insiders are buying. That's all good. Earnings is some distance away, 13th February. And if I look at the industry, alternative carriers, one of the, in fact, it is the strongest industry. How nice it is. It is the strongest industry at present. And it is the in the strongest sector also. Com services strongest sector. This industry happened to be the strongest industry of all. And we have a stock with very high earnings growth. Earnings is some distance away. So that is my buy selection. Again, I did not buy it. I want to repeat, the stop is bit far for my liking if I'm using daily charts to enter the trade. Now about the contrarian trade, bearish trade in industrials, the strongest ETF. The stock is Honeywell. I was looking for industrial stocks that are giving a proper bearish setup while DIA is the strongest. That is how to find contrarian trades. And that is Honeywell, HON. It has in fact, it has two possible short setups. One is the bearish flow trend following short setup. Another is a bounce short setup coming down from trendline resistance. Weekly is very bearish in color and shape. Very underperforming the market. Interesting, isn't it? How I am looking at the market. Sometimes I am looking at stocks aligned with the industry sector ETF like Com Services, Iridium. Sometimes I am looking at contrarian trades. Here, though Dia is the strongest ETF, Honeywell is an industrial sector stock, it is giving proper short setup where the risk is low. That is a constant in all my trades. Stop is just above the trendline resistances. If I look at its fundamentals, unlike Iridium, majority of peer stocks came down. That allows shorting overvalued stock with some earnings growth but not enough to buy it based on earnings growth. That allows shorting. If I look at its industry score from QEdge, it is one of the weakest industries and it is having considerable deceleration also over 2 days. So this is not as bucking the trend short trade as Apple of last week. And as I mentioned, not easy to find that much bucking the trend short or long idea. This is aligned with the industry. Apple was not. But that is in fact not bad. Having industry alignment is always a positive, always a positive. Again, that much bucking the trend stock I could short because I was aware of what was happening in the news regarding its market share in China, Apple's market share. But otherwise, industry alignment is always a good thing. And here market is not aligned, ETF is not aligned, that's a contrarian trade, and that is how I find contrarian trades. When I find a short setup in a stock where the overall pocket is bullish industrials, but this particular industry is not. That is my possible shortcut. I did not enter any short in Honeywell. I did not enter any long in Iridium. Last week was relaxing for me. Didn't trade much. Was happy to book profit in Apple. I will see how these two stocks move next week and I will not mind taking a long trade and a short trade, or maybe if the market is going up I'll be content with taking Iridium. If the market is coming down I may be content with just shorting Honeywell. I'll decide that next week. If you carry out the 360 degrees analysis using Q like that, you will most likely find other trading candidates today just as you would almost any other day. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend, and as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.